A Life in Tax, the story of the 25 million naira alert. The change coming on 1st of January 2026. When the Nigeria Tax Administration Act 2025 was passed, most Nigerians skimmed through the news headlines without much attention, yet hidden within its fine print. Section 29 of the Nigerian Tax Administration Act lies a quiet revolution that will begin on 1st January 2026. That date marks the start of a new era where banks, insurance companies, and financial institutions will begin sending quarterly reports to the Nigeria Revenue Service, detailing high-value customer transactions. The turning point. Under Section 29 of the Nigerian Tax Administration Act 2025, banks must disclose the names and addresses of new customers. For existing customers, individuals whose monthly transactions total 25 million naira or more will be disclosed, and companies whose monthly transactions reach 100 million naira or more will also be disclosed. This is a compliance measure designed to give the Nigeria Revenue Service visibility into high-value financial activities, allowing it to cross-check declared income against what actually passes through the banking system. The misunderstanding. Across social media, one post went viral. From January 2026, any deposit above 5 million naira in your personal account will be taxed at 15%. That statement created unnecessary panic, but it was wrong. There is no new tax on deposits. The law simply introduces third-party reporting to strengthen compliance. If your declared income aligns with your bank activity, you have nothing to fear. If not, expect a question from the Nigeria Revenue Service or relevant state internal revenue service. The legal connection: Nigeria Tax Administration Act and Nigeria Tax Act 2025. To understand what's coming, two key provisions work together. Section 29 of Nigeria Tax Administration Act mandates banks to submit quarterly returns on qualifying transactions. Section 202 of Nigeria Tax Act 2025 defines small company means a company that earns gross turnover of 50 million naira or less per annum with total fixed assets not exceeding 250 million naira, provided that any business providing professional services shall not be classified as a small company. From 1st January 2026, these sections will operate jointly to enhance transparency and data-driven enforcement. Tunde's lesson: preparing before the storm. It's 2025, and Tunde, who runs a busy event logistics business in Lagos, just heard about the new law. He often uses his personal account to receive client payments, sometimes 8 million naira here, 12 million naira there, without thinking much about it. When his accountant explained that from January 2026, banks will begin reporting individuals whose monthly transactions exceed 25 million naira to the Nigeria Revenue Service or relevant state internal revenue service, Tunde paused. His business turnover easily crossed that figure some months. He realized it wasn't about being taxed on deposits. It was about transparency and traceability. If he continued mixing personal and business funds, he might one day have to explain why his declared income didn't match his bank records. So, before the law takes effect, Tunde registered a proper business account. He updated his tax filings. He started tracking income and expenses more carefully. And with a sigh of relief, he said to his accountant, "The government isn't taxing my alerts. It's just asking my accounts to tell the truth." The takeaway: from 1st January 2026, the Nigeria Revenue Service and relevant state internal revenue service won't rely solely on what taxpayers declare. It will rely on data. There's no new 15% deposit tax. Instead, there's a smarter, more transparent system designed to close the gap between what people earn and what they report. Individuals with 25 million naira or more monthly transactions will be reported. Corporate accounts with 100 million naira or more will also be flagged. Honest taxpayers have nothing to fear. The message for 2025 is clear. Prepare now. Separate personal and business transactions. Keep your books clean. File correctly. Because in the new tax era beginning 1st January 2026, what matters most isn't how much you earn. It's how clearly your records tell your financial story. This has been an important update from Olatunji Abdulrazak, CNA, ACTI, ACIRB, founder, CEO, TaxMobile Online.